Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. All right, today's episode, we're coming to you from the George Washington University Duquesne Hall, Duquesne Family Studio, School of Business, right here in the heart of Foggy Bottom. Welcome back. This is a GW Investment Institute podcast. This is for educational and informational purposes only, and hopefully some entertainment is spiced in there as well. All right, so today we're going to talk about a specific company. Now, we do own this company. Again, not investment advice in the student investment funds, but it's been in the news. Today is February 24th, 2026. When we're talking about this company, it is CrowdStrike. And so CRWD, cybersecurity company, we're going to use the framework business, management, price valuation, and balance sheet. So today we're diving into a specific company, not a general overview, but we're going to tackle this. Now, why are we tackling CrowdStrike right now? Well, because we own it in the portfolio, or some of the portfolios for the Investment Institute, and it sold off hard yesterday. And a lot of these companies have been hit hard because Anthropic and other, specifically Anthropic, said, well, we have some security things, and now, so all security companies, CrowdStrike down 10% on that news. And so, but given the circumstance, check it out. Let's dive in. Let's do a little bit of our own work on this company. We'll score each component. Remember, we do 1 through 10 for each component. So business, management, price, valuation, and balance sheet. Then we have a composite score. Pretty simply, we weight them equal, so 25 each for the category, and we'll talk about each of those categories. But let's dive in. Let's try to get some basic stats on this company. So CrowdStrike, again, this is a cloud cybersecurity company. If you have not heard of it, obviously an important role in the world of AI, in the world of cybersecurity. It is important to have cybersecurity in the first place, and certainly threats are seeming to go in one direction, and that is up. And they have been benefiting from that. And so, but let's talk about what's happening with this company. Again, let's get some stats. So this company is almost a $90 billion market cap, again, as of Feb 24, 2026. So this is not an elite company, part of the Mag 7 trillion dollar category here, but this is not a small company, right? And so it's approximately $90 billion market cap. So not a small company by any measure, but again, not the behemoths that sometimes we talk about with the Mag 7 and all the trillion dollar, Microsoft, Apple, NVIDIA type of category. So when we talk about this company on the business side, so let's break down a little bit. Again, this is a cybersecurity company. So let's get some of the revenues together here. Again, we mentioned the market cap. So what's the revenue for, and we if you've watched episodes before, we go back. And by the way, shout out to our viewers and listeners in Germany. Thanks for tuning in. There's a group of you out there. We appreciate you. Please keep coming back. All right, back to the analysis here. So what's revenue for 10/31/2025? That's the latest data here available that we have. And so their fiscal year, by the way, is a 1/31, so it's a little bit different. That's why it's a little bit different on the data that we have. We'll soon be getting the 1/31/2026 data, and so that's why if it sounds like, why do we have 10/31/2025 data? That's because the fiscal year is 1/31. So here we go. So the revenue last 12 months through 10/31 here, you're talking 4.5 billion, and that's an increase of 22%. So that's a pretty good number right there. Now let's look back, as we try to always do. Okay, that's 1 point of time. What's been happening? So 2022 was 1.4, up 66% to that point. Then it went up another 54% to 23, and it went to 2.2, and then to 24, it went up 36% to 3 billion, and then 3.9, so 30% for 25, and that gets you to the 4.5 for 10/31/2025. And so the trailing 12 months. So those are big numbers, right? And the expectation for the 1/31, the estimate right now is 4.8. That's up 21%. And if you look out to 2027, they're expecting another 22% growth consensus here for the 1/31/2027 number, which is obviously important. And that's what's getting compressed here when you talk about people are starting to eat their lunch, specifically Anthropic and the AI game in general. But right now, 5.8, 22%, move off of the 2026 number. So, and that's a pretty big move for pretty big numbers, right? So that's still growing really well. Now, what's the quality of this business? So when we talk about the quality of these businesses, we generally go right into the gross and the net margin. So let's tackle those up next. So what are the gross margins for CrowdStrike? So again, ticker CRWD. This so for the 1031, as we've been talking about, 2025 gross margin 74%. So this is exceptional. This puts this in the exceptional category. This is cloud native cybersecurity business. So that this, you would think, if you didn't know anything else about this business, that could have the possibility of having high net gross margins, and it certainly does. So it's software, it's cloud enabled. They have good high gross margins, and so. But let's look back. Is this a one-off? Just happened this year? No, that's not the case. If you look in 2022, you're talking almost 74 and 23, 73, 75 and 24, 75 and 25, and 74 for the 1031. Projected actually going up to 78 and 78, that 131 2026 and the 131 2027. So actually margin expansion from here. Very good for a business. And so now, what is different right now about this company that's been growing, investing heavily, and certainly in a different category compared to some of the behemoths, is that it has not been profitable, but it is projected to be profitable for the first time this year, for the full year. And so if you look, check that, it's been profitable once before in the last few years, but just mildly. So if you look at what's the net profit margins here, you're talking minus 15 in 2022, minus 8 in 2023, plus, this is where it was mildly plus. So check what I had mentioned before, but not a huge profit, but profit, 3.2%, and then minus 0.4 through 131 2025, and then the trailing 12 months minus 3.9. Now, it is projected come the end of the month that we get the numbers, 131 2026 numbers, that they're going to generate a profit. So they're going to have nearly a 20% profit margin. So that's a pretty big jump. And then the 2027 number is even stays high and jumps up a bit more at 21%. So those are really great metrics. And now, so what else should we be checking? We're talking about the quality of the business, and we'll bring this back when we talk about the balance sheet as well, so maybe before we move on to that, something about that. So the trajectory for those profit margins are very good, right? We're seeing now that they're turning on that cash flow machine, and they're going to go from, eking out a profit in 2024, kind of break even the last couple of years, basically break even in 25, and right now the trailing 12 months minus 4%, to say for the full year, okay, fiscal year 131, we're going to be nearly a 20% profit, and we're projecting consensus 2027 131 at almost 22%, 21.5 really. So that's a big move off of where it is, and certainly that's then starts to generate more and more free cash flow. And so if you look at now back to the free cash flow in 2022, 441 million, 676 in 23, 940 in 24. So a nice steady increase here. In 25 billion, 1031 2025 is 1.1 billion, and the projected 1.2 billion through the 131 26, and then next year, the 27 number, 131, 1.7. So pretty significant and consistent increase in free cash flow. So as an investor, these things you love seeing more free cash flow. And the company has been investing. So let's check out the CapEx numbers. Now, these are not the enormous numbers that we've been talking about. 200 billion for Amazon, 150 billion for Google, Alphabet. But let's check, where's the CapEx? Where is it here? So in the most recent period, we'll start in 25. So the trailing 12 months through 1031 is minus 356. And then the projected for the full year, fiscal year 2026, 131, 284. So the million, not billion, just to be super clear. That's an M, not a B. Very big difference. So if you look back, it's actually declined, which is the projected is to decline a little bit. So if you look at the 2022 numbers, you're talking 131 million, and then 264 in 23, 226 in 24, 313 in 25, 356 again through the 1031 number, projected 284 for the 131 2026, and then it bumps up actually back to 350 here for 2027 consensus. So this is nowhere in the same neighborhood as what we've been talking about with the Mag 7 and these people playing to win. Now, maybe with the threats that we've talked about from AI, that they're going to have to bump up that CapEx, and it's going to have to be spent on AI-related activities to better position them to help basically fend off what's going to be maybe a competitor, which could be Claude by Anthropic and other AI players that are running frontier models, maybe even Gemini and others, or Grok, or whoever it happens to be, or ChatGPT that says, okay, well, we actually can build stuff that does at least part of their business. Maybe not the whole thing. Maybe you're not replacing the whole thing, but if you put a dent in their business, well, okay, that starts to put a dent in the gross margins. That starts to put a dent in the net margins. That over time deteriorates free cash flow. And you got to invest more, and so it becomes a more competitive business. Then the gross margins come down. The net margins start to come back down. They just got them on the upside trajectory. The free cash flow slows down. And you have to invest more to get to the same place. So that free cash flow number, even if everything else stays the same, which it's not, deteriorating, is going to also go down because you got to put more capital to work to make that happen. So return on invested capital, going lower, return on equity going lower, generally speaking. All right, all else being ceteris paribus, all else being equal. All right, so the business. So let's get back to the framework here for a moment to talk about, okay, well, what do we grade that business? So generally speaking, that's a pretty good business, though, the numbers that we've had and the trajectory. Now, weighting in how that's going to play forward for AI. So I think you ding it a little bit there, right? And so certainly I think this is maybe a 9 for the business, given the trajectory and where it's going. It's kind of capital light, generating a lot of free cash flow. So I would then say ding it at least a little bit. You could say an 8. Let's give it an 8.5 for this category. Remember, business is 25%, but we went over those numbers. Those are super solid numbers. That's elite territory for those gross margins. And the net margins are now coming to good territory, but not elite. But the gross margins are elite. And so that starts putting you in the right category. Taking a sip from my George Washington University School of Business mug. Excuse me. And now let's dive into the management. So George Kurtz, founder and CEO. One of the things, not investment advice, one of the things that we love about investing in companies are founders. And so Jensen Huang, for example, obviously great. And there are other examples, but here, when a founder is leading the company, we generally consider that a great thing. Now, that doesn't always happen. It's not always the case that the founder can stay all the way through when this becomes a bigger and bigger company. But certainly at this point, Mr. Kurtz probably has plenty of money, but he, I think, wants to build an exceptional company. He navigated through, they had a little bit of a crisis, if you heard about the software update last year. They canceled a whole bunch of flights. That was CrowdStrike, and with Microsoft included there. But they cleaned that up. Retention was still very high in the 90s even with that faux pas. I think it shows there's an example of, well, this solution must be good if you had such a colossal public failure and people stuck with it. And so kudos to Mr. Kurtz and his team for sorting through that. But also, it is a way that you can understand that if people were willing to stick with CrowdStrike through that, when again, it was such a public failure and people understood what happened and, they had to do the mea culpa here, but people stuck with the software, retention's still very high, founder-led company, capital allocation, we went through the stats, has been very good. Again, capital light, they've been high gross margins, generating good free cash flow, increasing. And so the management team, I think, has been super solid, very good track record. They're absolutely aligned. The track record has been aligned with investors and absolutely putting money to work in the R&D space, but certainly, again, not in the category of the Mag 7, but putting money to work and making the business better. Now, maybe they're going to have to do more of that, and I do think that's something to pay attention to. So what should we give the business there? Well, I would give that a 9. Excellent, founder-led, high points and high praise so far. Again, went through a tumultuous period there last year in 2025, navigated through that and came out, I think, probably stronger on the other side. So let's now move down to price versus valuation. All right, so let's start digging into some stats. And this is where sometimes it gets quite tricky to say, okay, well, what is this actually worth? Are we paying too much? How does this company look from the perspective of valuation? Now, remember, the trailing PE, which we never really talk about, but here it's not going to exist because they haven't been really profitable consistently. But there is a forward PE. But when you look at the forward PE, it's 95. So the forward PE is still very high. Now, a company that's growing this fast, has these gross margins, is in a space that's probably going to continue to grow. Dan Ives consistently mentions this as one of his favorites in the AI world. In the AI play, when you talk about, okay, what's the play then in cybersecurity? CrowdStrike is one of his faves there, and he was on the show as a reminder. But the valuation is quite high, right? 95 is not for the faint of heart. Now, when you factor in that it seems like for cybersecurity, the trajectory is one way up. The threats are going up. So the demand for this is up. Now, then the countervailing force right now is, well, how's AI possibly going to eat their lunch? And even if they don't eat their full lunch, if they eat half of it, well, that means earnings are down. And then that probably means that they have to invest more in the business to achieve the same results. So what does that mean? Free cash flow is down, return on equity is down, return on invested capital down. So this happens when the competition starts coming in. So then very likely, what's the multiple going to do? Likely that compresses, right? And so even if you said, well, they're going to figure out a way to get the earnings and they're still going to grow at 20%. So even if you say, okay, well, we're going to get those earnings. Another challenge is, well, if they have to spend more to achieve the same earnings, the multiples are probably going to compress anyway because the business is not going to be as profitable. It's not going to generate as much free cash flow over time. And so that becomes an issue. And so even though, okay, we're keeping up with the earnings, but we're going to still get pressed down. So we're not going to trade at a 95. We're going to trade at a 75 or a 65. And so that, that's something that we need to watch for. And I think that's the price discovery that everyone's trying to work on, and the market certainly as a collective of individuals and institutions that are in the market doing the price discovery. That's something that we're all working on. Now, is 95 justified? I don't know. Some of these things, if they're growing well and they're well positioned, and there's just going to be a few players that kind of an oligopoly that take the high end of the cybersecurity market, well, maybe that is a deserved multiple. And if you look in the past, Amazon as an example, Amazon looked expensive all the way up. And so the traditional metrics sometimes are very challenging to use for companies that are growing quickly in industries that are growing quickly. And so be careful. The 95 is high, but if it's in a space that you think has good tailwinds, remember, not investment advice, has super strong tailwinds and effectively is an oligopoly with some other players like Palo Alto, as an example, maybe they're going to take a huge chunk of that market share. Now, again, that's AI has to be factored in now, and they're going to have to work their own magic with AI as well. All right, so let's get back to scoring then on this. And so because of that, dinging the valuation a little bit here, right? And so let's call this a 7.5 on the value at price versus valuation. All right, now let's move on to the balance sheet. Now, the balance sheet is quite clean, but let's take a quick look here. What's on the balance sheet? $4.8 billion in cash and $800 million in debt. So really $4 billion in net cash, just to make the numbers round here. And generating, again, this year, 1031, but you can do the projected here, $1.2 billion in free cash flow. So not worried, $4 billion in cash, generating $1.2 billion. Again, nobody's losing sleep. You're going to sleep like a baby with this, old reference brought back, with this balance sheet. No worries. We're all sleeping well at night with the CrowdStrike balance sheet. Now, what we do also is, okay, well, is this a recent phenomenon, or have the management team, which is also a call on the management team, have they been responsible with the balance sheet? And they have. And so if you look back in 2022, you're talking 1.9, almost $2 billion in cash and $770 million in debt. So net cash that year, 2023, 2.7 versus 780 net cash. 3.4 billion in 24 versus 800 net cash, and 131 2025, 4.3 billion, 788 debt net cash, and we just did right now through the 1031, you're talking about 4 billion in net cash. And so for the past few years, they've been very responsible with the balance sheet, which also gives you some marks to the management team. Those are the people in charge of this. And so I think we can give high marks to the balance sheet plus the free cash flow. So now let's get back to the framework here. So you can probably give it an even higher score, but let's give them an 8.5 just because, the reason to do that is they might need to start spending some of that money to ramp up on AI spend. And so we'll have to see how that plays out. So, but excellent balance sheet, 8.5 there. All right, so if we pull all that together, so let's start pulling all the scores together. So business, we said an 8.5, excellent business, fantastic gross margins, now starting to be profitable, very good. Now has these, both AI tailwinds, but also could be 22% year-over-year growth in the revenue, but also could be, AI, headwinds that they're going to come after them. So we'll have to see how that plays out, but giving them an 8.5 for right now. George Kurtz on the management side doing a great job. We gave them a 9 there. Capital allocation has been solid. They've been growing the business, generally capital light, but they're investing the required amount of capital to make this capital light versus the Mag 7, for example. Still have to invest real money to make this work. 9 on the management side. The price versus valuation, ding, 95 is the PE forward. That's a 7.5 for that. And then the balance sheet, clean, little ding, because they might need to start spending some more money, 8.5 for that. That weights everything to about 8.4. And so, look, that's a solid company. I do think with all the news that's happening, you have the sell-offs. This is a very solid company. By the way, it's 8.375. If you're keeping track and score at home, it's the round to 8.4. But I think you have to do this analysis, especially when these things happen. This is in our portfolio, not investment advice. But I think when you look in the total right now, we're certainly, we'll wait to see what some of the trades come through at the end of the semester and what people do here. But still a very high quality business, has some really good AI tailwinds, but has some AI headwinds as well, but is well positioned, clean balance sheet, great management team. Let's see what happens. Pay close attention as a business person, analyst, investor. That is it for this episode of Market News with Rodney Lake. We'll see you back on the next one. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.